to it. So create an annual review. So the first thing you're going to do in step 1 is pick which fiscal year.
Mm-hmm.
And so we'll start with, we'll actually go to last year, just because as you're creating an annual report, it's typically taking your budget and comparing it to actuals. So I'm just using the example report right now, but you would pull out your year-end financials once they're completed, and then make entries into that. And then what you're going to do here is reference. I guess you need to set what you're going to be referencing, and in this case, we're just going to be referencing the 2024 reserve fund budget. In your case, you could just reference the reserve fund study that was just written. And so step 2, what was the reserve fund balance at the beginning of the fiscal year? So that's talking about January 1st, 2024, right there. And so in this case, we'll just leave it as is, 694,000. That's what we're going to assume the opening balance was. Next step, you're going to enter essentially your contributions, any income that came into the reserve fund account. So again, we'll leave it as is, but $300,000 in contributions for this particular property. They earned $25,000 on reserve fund interest, and there were no special assessments. Any additional deposits, you can add others. In some cases, you may do something like borrow from the operating fund or the operating account. So that can show up as income. However, if you borrow from it, also tends to then become call it a liability on that account that you would want to transfer back at some point. And then right here, what we're going to do is basically you have the option to add any other, I guess, add description to what that $50,000 that I mentioned was kind of uncategorized deposits. In this case, we said, all right, this property, maybe it had some rental units that the Condo Corp owned, so 45,000 and 5,000 in uncategorized. It's always going to sum them up. So if we were to delete the rent, it just lists everything as uncategorized deposits. If you want to add some more of a code to it, you can then enter it, and if you hit plus, then it kind of does that math for you, leaves 10,000 as uncategorized, 40,000 as rent. I don't think this is probably that applicable to your condo, but these are just options that are available in it. So then step 4, now we're getting into expenditures. Any money that left the account, we're going to say that it was $500,000 left the account, or let's say $525,600 left the account, total expenditures. You can just, I'll just delete these for now. You can just leave it all as uncategorized, and it will still run that report. It will still compare what you budgeted for contributions or income and what you budgeted for expenditures, and just run a basic comparison of that. Or you can add some codes to that. And so, yeah, we'll say stucco replacement, and that was $250,000. And you add that, again, it kind of quickly does that math for you, leaves 275,600 as the uncategorized, and then you also replaced interior lighting, and that was a cost of $100,000. And you can keep going until that uncategorized equals 0, or you can just leave some of that as uncategorized. So once you move through that, it now builds you kind of a bit of a review on what was entered. And so opening balance was 694,000, as we mentioned. The contributions in were 300,000. There was $50,000 of other revenue, $25,000 of interest, and $525,000 of expenditures, for a new closing balance of 544,000. And so essentially, if you're looking at your year-end financial statement, you just want to double check to make sure that that all lines up. you actually wouldn't even need the year-end financial necessarily, even if you're just looking at your reserve account, and you can kind of add up the total contributions in were, or total income in were, in this case, 375,000, 300 plus 50 plus 25, and 525,600 left the account, and then it'll add all that up and just confirm that you're good. Once you've done that, you can click the button, the review is complete, and it is going to run that, and it generates this report right here as a PDF. It also saves it in your reports on the platform, but this is what that report will then look like. And so it brings up your annual review, which just can be attached to your year-end financials. You can use it. Typically, it gets used as part of the AGM package. It compares the opening balance to what was budgeted versus actual. Same thing with contributions. Interest, we had a lot of interest entered in there. It was kind of just random, but it was like way higher than budgeted. And then the closing balance was only 61% of what was projected in the original budget, and that is because the expenditures were higher than expected. And there we go. And it reruns your 30-year forecast in this little window. It's not super detailed, but you can see in this case, this is one has a bunch of risk of special assessment. That's why I used it, because it kind of shows how we're able to identify that. But you can see there's a bunch of negative balances projected kind of here in the first 10 years, and then again out kind of 20 to 25 years. And I'll show you how the tool kind of also assess that, but that's your report that gets generated automatically after you fill that information in.